Welcome back to the channel, guys. Precious Millionaire Logistics. Today we'll be looking at the AUDJPY, that's the Australian dollar against the Japanese yen. This is the daily chart. Before we head on to today's chart, guys, let's do a recap on what we did earlier on this chart. So on the 9th of October 2021, we actually analyzed the AUDJPY trade right around this point here when the price was around this area, and we were able to enter the market on the Monday, the opening of the market on Monday, and we entered the trade here, and then I think we pretty much rode this trend up to the top side, so we got our exit around this area. Now, why did we pull out of this trade, guys? Well, we noticed a candlestick reversal pattern here, being a bearish engulfing candle. As you can see here, you can see the green candle here being engulfed by the big bear candle. So it's a bearish engulfing pattern here, which gave us reasons to close our positions and secure our profit. Recall that how we carry out our analysis on the weekly chart, we look for the directional bias, and on the daily chart we actually spot out candlestick reversal patterns, right? And then we scale down to our 4-hour to execute our trades, or maybe if you prefer on a lower time frame, you could execute your trade in the direction of the pair. So at the end of this trade, guys, we were able to secure a total profit of 297 pips. 297 pips, guys. There's a link on the screen, on the top of the screen there. You could actually check out the analysis we carried out on this trade and how it played out. However, guys, do not click the link. So guys, by the end of this analysis that we're going to carry out today, if you're patient enough to get to the end, we're going to determine the mid-term directional bias of the pair, an entry and exit trade plan, and at least 203 plus pips potential profit in pips, PPP. What's more, guys, let's dive into the charts. Look at the AUDJPY for today. So analysis starts here. This is the Australian dollar against the Japanese yen pair, and we're on the weekly chart. As always, what we intend to do on the weekly chart is to find the directional bias of the market, right? So let's head straight on. Okay, so from this point, guys, what we saw here was from this level here, there was a kind of push to the upside, right? The market tried to push up here, but then at this point it was kind of rejected. There was no break and close above our moving average here, so the price came downwards. Back then it came into a demand zone. There was a demand zone formed here. Well, yes, there was a demand zone formed here on the weekly chart around this area. You can see there's a pin bar on this at this point too, right? And then a demand zone was formed here. If you recap to our previous analysis, you're going to get much of that. And now the price broke above the moving average and it went further upwards, guys. So at this point now, what we can connote is there is a zone here. There's a kind of resistance turn demand zone around this area here. This area is a very sensitive area that the market has been reacting to for quite some time. So we have here a pull, right? There's a supply zone, there's a supply zone in this area right here. So there's every possibility that the market could maybe come here to form a double top or whatever. But this is what we notice. If you recall from our previous analysis, we entered this trade. We entered the trade here. We entered a trade here, right, to push to the upside. And then what we observed was we taking most of the profit, about 297 pips again. That's how we trade. So when the price now got into this supply zone here, after we pulled out of trade, we've been watching the market to see if we can spot a candlestick reversal pattern on the daily chart. But guys, let's agree on one thing here. You see, when there's a move, now this is one of the tricks that I'm going to be giving out. Why? Because you've been patient enough to get to this point of the video. Now what happens on the weekly chart, guys, it's kind of tricky but very magical. When there's very much of a weak rejection, right, of this magnitude, like from this level, from this point to this point, a weak rejection, what happens in the market is that there is a liquidity gap there, right, that needs to be filled. So there's every possibility that at the opening of the next week, the price could go bullish, right, to fill in that liquidity. So what we do as technical analysis trader is that when we get that point, like we see this kind of rejection here, we don't go into the trade immediately. We wait for the market to get up to that region and then look for another price action pattern that will give us a reason to actually enter this market. Now guys, at this point, we've analyzed that, we've understood that there is a kind of supply level here, so there's every tendency for the market to fall downwards. It's a very good setup. So guys, when this market falls downwards, what we'll be looking at to take our profit. Now we go on to the next step, the entry and the exit plan, guys. So this is where we're hoping to take our profit from. So if we calculate from where the market is right now, I think it should be giving us somewhere around 203 pips or more, right? Now let's move to the daily chart. So we have this here. We'll analyze from here on the daily chart where we have the price action pattern. So let's move on to the daily chart, guys. Okay, so we're on the daily chart right now, guys. We're on the daily chart. I'll be right back. Okay, so on the daily chart, guys, what do we see here? Exactly what I told you. Okay, so at this point here, you see where the market, where we marked it, we saw a kind of bearish engulfing pattern here, right? And then what we see here is the price trying to go up to fill this liquidity. As you can see here, when the market got up to this point, what we're seeing on the daily time frame, remember guys, the daily time frame is very important that you carry out the price action signals. You look for technical analysis information on larger time frames, guys, on larger time frames, because you need to get a grasp of the bigger picture before you can scale down to your lower time frame and trade in the direction of the wave, in the direction of the impending trend, in the direction of where the money is, guys. Okay, so as at this point, we found here, what we were seeing were indecision candles, little kind of little pin bars, and then indecision candles, right? You can see this here, this right here is a doji. If you can do a little research on your own, you know what a doji is. Dojis means a period of rest in the market, or a period of consolidation, a period of indecision in the market. And when this kind of things happen in a very critical and sensitive areas like this, it could only mean one thing, that the market is about to reverse. So then what is followed by a very large it's followed by a very large bearish candle, right? A very large bearish candle. This right here, guys, is a flag. I think this right here is a bearish continuation flag, right? From this point, you have red candles and you have green candles as though they were going upwards, and then you have a very big, very huge red candle here. It shows a bearish continuation. I can't really denote the name that it's called technically, but that's just what it means, guys. You don't need to cram these things. So at this point here, guys, what are we looking for? We're looking to enter this market, right? As today, if the market was not entered, right, somewhere around here, right, somewhere around here. So at this level now, guys, we can scale down to our lower time frame and then look for maybe little price action pattern movement. Now I'll give you another trick now, guys. I'll leave you with another trick. Right here, we're about to summarize. We're getting to the end of the video. I'll leave you with one trick. Now, there are times when you can enter this market, or you can check your charts to actually look for entry, so you don't sit by your computer or hold your phone every time looking for it. These are the time, guys. You can check the market in the morning. Now in the morning, with time specific, guys, by 8 o'clock, right, 8 o'clock, you can check the market. Now 8 o'clock mostly, if I'm looking at a bullish scenario, right, I try to check the market at 8 o'clock, between 8 to 10, right, to see if I can find it there. Then if I'm looking for a kind of sell setup, I try to enter the market between 12 and about 2 p.m. right? That's when you could see all those candles. 2 p.m. you could see sell opportunities there in the market. But before you do this, guys, you need to be sure that you're trading in the direction of the trend, right? So guys, that's all for now. Remember, my fans here, we're active on Instagram. You can follow us on Instagram, right? Millionaire Logistics. On Facebook too, we have a page on Facebook that is very active. You can still send us a shout out there. You can go through our page review. You can, go there and communicate better with us, right? It's still Millionaire Logistics on Facebook. And guys, well, don't subscribe. Don't subscribe. Don't subscribe. So